That's the first tick on the index, by the way. Absolutely flat, but a little bit of a positive bias.
The Nifty has recovered 150 points from the day's low.
But if we look at the markets, what a recovery from the lows.
Indeed, has been a spectacular recovery. The early morning lows, there was a bounce which came, and it's continuing. 100 points on the Nifty, so that is, a 0.5% higher. The Nifty Bank will end 0.75% in the green. So actually the Nifty Bank doing a little better as compared to the Nifty and the small cap and mid cap indices.
Hello and welcome to Markets Today. I'm Reema Tendulkar and these are the headlines for the day. Stocks recover after an early sell-off. Sensex gains 300 points. The Nifty gains nearly 100 points. Bank stocks rally, but mid-caps underperform. Reliance Industries post strong growth powered by retail and oil and gas. Even as Jio and O2C turn in a steady show, analysts see significant upside for the stock. Cipla Dr. Reddy's turn in a good quarterly performance buoyed by stronger than expected profitability and point to better days ahead. Cipla soars while Dr. Reddy's succumbs to profit booking. SBI Cards, Mahindra & Mahindra Financial Services, IDFC First Bank, AU Small Finance Bank slip as their results disappoint. But AU Small Finance Bank's acquisition of FinCare Small Finance Bank is seen as a positive. KPIT Tech gained 5% on a strong Q2 while UPL fell after it missed estimates in the second quarter. Petronet LNG's profits rose 9%, but a costly diversification plan sees the stock tank 9%. And here's a lineup of what we have for you in store today. In Market Opinion, Tahir Badshah of Invesco Mutual Fund. In Corporate Voices, we have Umang Vora, MD, Global CEO of Cipla, and Ramesh Iyer, Vice Chairman, MD of M&M Financial Services. Let's start with the market action then. Sensex gained 300 points. The Nifty rallied 100 points as stocks recovered from an early sell-off. The Nifty dropped below the 19,000 level a few minutes after opening, but since then it saw a steady pullback, largely led by blue chips, bank stocks, Reliance Industries. Midcaps, though, underperformed, with the index clocking marginal gains. Prashant is here with the market action.
Well, we build on the gains that we saw on Friday. So the market had been selling off non-stop till last Thursday. Friday was a big bounce, and the question this morning was, will we be able to build on it? And we did. The Nifty on your screen, strong gains here. The Nifty Bank, which is the weakest of the lot, that actually recovered more than the Nifty, 0.75% gain there. It's also come up to an important technical level. The 38% retracement of the October fall. Mid-caps and small caps, not so much. I mean, they were swinging between being in the red and the green, but they ended marginally higher. Nifty gains in names like BPCL, Ultratech, ONGC. Losses coming through in names like UPL, Tata Motors, and Maruti, which was down. Actually, autos as a pack was down and out. Now, in the broader markets, advanced decline was positive, not by a whole lot, but was more up than down. CPCL and MRPL, the standalone refiners, doing well. Idea, Jayaprakash Associates, news flow here for both. Phenolix Cables against news-related. Supreme Industries, massive move in the last 30 minutes, and earnings had come out early. We had the management with us as well. Anupam Rasayan, Jindal Saw, Satin Credit Care, HPL Power, Senco Gold were some of the other gainers. There were lots of losers as well, and mostly earnings-related. So M&M Finance, earnings disappointment. AU Bank, there was an acquisition. Market did not like it, at least not the first cut. SBI Card, there was Dixon, Petronet. Petronet was a massive move, especially in the last 60 minutes of trade, earnings-related. UPL cut its guidance. Mazgaon Dock, IDFC, Ujjivan Small Finance Bank, where the management with us in the morning. G Shipping, V-Mart were some of the others where there were pullbacks that were seen. Still not out of the woods, but I think this we will take 2 days of recovery, solid recovery is what we have seen. Back to watching U.S. markets and the cues they hand us when we come back tomorrow.
Thank you for that. In Market Opinion, Tahir Badshah, Chief Investment Officer at Invesco Mutual Fund, said the intermittent volatility in the market should be considered as a buying opportunity. He added that he continues to maintain a positive, constructive view on the market.
Yeah, I think I continue to still maintain a very positive view as far as the market is concerned, particularly from a domestic standpoint. I'm pretty constructive. I take a lot of confidence in the investment cycle, which is currently progressing in the country, and I think that can extend itself. Yeah, I mean, intermittent volatilities, which we witnessed in the last some time, should clearly be considered to be investment opportunities. Within the BFSI, particularly over the last couple of days, we've seen some, segments and pockets where we've, particularly on the retail side, we've seen a little bit of stress. And that's something which therefore becomes a monitorable from here on. Seen some auto results which have been quite good, although near-term trends in terms of festive season, etc., still need to be monitored. It's a bit of ground still to cover within the result season, but by and large, I think it is still pretty much a decent inline result season up until now.
So far, result season in line. Let's get to the second headline then. Reliance Industries gained 2% on the back of its second quarter numbers. The numbers came on Friday post-market hours, but the stock reacted today. Profits up 27% year-on-year. Revenues were up 1%. Meanwhile, the retail business saw revenues jump 10%, driven by its grocery and e-commerce business. Sonia is here to give us the key numbers and what brokerages had to say about the earnings.
Well, thanks a lot for that. So Reliance Industries numbers were better than what the street was estimating across segments, whether it's retail, telecom, the oil to chemicals business. The numbers beat estimates, but the star of the show undoubtedly was the retail business, which is double-digit growth that Reliance saw on the top line in the retail business and 7% margins. The telecom business was also quite steady, with the average revenue per user rising 2.5% year-on-year. But the big beat really came in subscriber addition, with Reliance Jio seeing industry-leading subscriber additions of over 11 million subscribers in this particular quarter. The other positive was the improvement in the balance sheet for Reliance Industries. The debt of the company has moderated by 5,200 crores in this particular quarter. Now overall debt standing at a little over 3 lakh crores. And the capex of the company is also being funded by internal accruals. A lot of brokerages have a positive on the stock, saying that the risk reward is now favorable. Across segments, there's an improvement that was seen, as well as the balance sheet of the company is improving. Back to you.
Thank you for that, Sonia. Let's get to the third headline, and that's the pharma stocks. So Cipla's and Dr. Reddy's both delivered their second quarter numbers better than what the street was anticipating. The profitability was higher than consensus expectations. Cipla's margins hit a multi-quarter high. Dr. Reddy's bottom line net profit rose 33%. But the stock reaction was fairly diverse. So Cipla rose 2%, but Dr. Reddy's saw some profit booking. We chatted with the management of both these two pharma majors, and here's what they had to say.
A lot of news reports with regards to the possible deal from the Cipla promoters' end. We do understand that there could be some amount of standstill which could have been reached on account of valuations with regards to the Cipla stake sale. If you could comment on it.
So, Ekta, as the company is very different than and has, is hearing about these with the same frequency that the general public hears about it. There's, the promoters are one entity, the company is the other. It's very, we have not heard anything either way in terms of, in terms of the transaction as yet. And, we've been saying that this is speculative from the beginning.
Yes, so most of the growth came from the base business and the other products primarily driven by volume growth and market share. And in terms of pricing, it's continued to be moderate, more moderate than we used to in the last couple of years, very much in line of what we had in the last couple of quarters. We will continue to show very, very healthy margins. So EBITDA is 32%, and which is way above. Normally, we are giving guidance of 25%, and right now we are walking above that guidance.
Get into a break. We'll be back in a jiffy with the other headlines. Stay tuned. Welcome back. You're watching Markets Today, and this is the fourth headline for the day. SBI Cards, Mahindra & Mahindra Financial Services, and AU Small Finance Bank all slipped in trade as their second quarter numbers disappointed the street. Abhishek joins in with the key highlights. Abhishek.
Well, for SBI Card, the credit cost continued to remain elevated for 19th quarter in a row, this time around at 6.7% versus 6.8% in the previous quarter and about 5.6% in the same quarter last year. Net interest margin is the lowest ever for them as revolver rate continues to remain low at 24%, flat for 5 quarters in a row. So the net interest margin is at 11.3% versus 11.5% in the previous quarter. Asset quality, slight deterioration seen by 2 basis points on gross NPA ratio. Net income was at 3,616 crore. Motilal Oswal was working with a number of 3,680 crores, while the PAT came in at 603 crore, below the Motilal Oswal estimate of 650 crore. For M&M Fin, the numbers were below our poll. The net interest income was at 1,645 crore. We are working with a poll of 1,691 crore. They have reported a profit of 235 crore, while our poll was at 463 crore. So for second quarter in a row, the earnings or the PAT has missed, the poll by a huge margin. Asset quality in terms of absolute value, gross NPA has increased by almost 6.74%, while gross NPA ratio has come down by 5 basis points thanks to the AUM growth. Net interest margin declined sharply to 6.5%, one of the lowest that you are seeing in last 9 quarters. The AUM growth is at 20.5% YOY and 5.5% sequentially. That's due to the fact that tenure of the book has increased, so disbursements to AUM ratio has come in at 41% versus 23% in the previous quarter. AU Small Finance Bank, in terms of numbers, slippages have increased in absolute value by more than 10% quarter on quarter. A gross NPA ratio has inched up by 15 basis points to 1.91% versus 1.76%. Net interest margin is at 10-quarter low, and net interest income growth is about 15.3% YOY and about 0.2% sequentially. So it's the other income which has helped the PAT this time around. Provisions are elevated on account of increase in slippages that you have seen. PAT has come in at 402 crore, up 17.3% YOY and about 3.9% sequentially. They have also announced, their intent to acquire Fincare Small Finance Bank. They will give about 579 shares of AU Small Finance Bank for every 2,000 shares that is there in Fincare. This acquisition will increase, AU Small Finance Bank loan book by more than 16%, and it gives them a huge presence in southern states like Andhra Pradesh, Telangana, Tamil Nadu, as well as Karnataka. Back to you.
Thank you. M&M Financial tanked 11% in trade after the company reported numbers which missed the street expectation. Profits fell 49% year on year. The bank's asset quality deteriorated, with the net interest margins hitting a 9-quarter low. Ramesh Iyer, Vice Chairman and MD at M&M Financial Services, says their assets will show a growth of 20% by the end of this fiscal year.
So as far as the NIMs are concerned, we'll first move to a 6.8 maybe this quarter end, and then we expect by March to touch 7% as far as NIMs are concerned. And in as far as the stage 3 is the credit cost is concerned, as I said, this quarter and the next quarter are the great quarters from a collection perspective, and which is why we've kind of guided to say it'll be anywhere between 1.5 to 1.7 as far as the credit cost is concerned. We have a 27% growth, and I think that's a very healthy growth over the previous. And we do expect that by March, you will continue to see AUM growth upward of 20-22%.
Moving on then to the fifth and the final headline for the day, and it's more earnings. KPIT Tech gained over 5% after reporting a strong set of numbers in the second quarter. Not just that, the company went ahead and raised its full-year guidance. So the company reported a dollar revenue growth of 8.4%. EBITDA margins expanded by 20 basis points. The profit jump for the company was just 4.8%, and that's because the comparable quarter of Q1 had a one-time gain. So if you do the adjusted profit, we're staring at a growth of close to about 16-17%. The EBITDA margin improvement is quite, creditable, because the company had wage hikes in the current quarter, which negatively impacted their margins by 250 basis points, yet the company could up the margins by 50 basis points. FY24 guidance has been raised. Earlier, the guidance was about 27 to 30%. Now they're saying the revenue for the company will grow by 37%, and plus they're talking about EBITDA margins of 20%. Kishore Patil, the co-founder, CEO and MD of the company, had to say that while the geopolitical tension, economic uncertainty across geographies is leading to a softer macro environment, he's keeping a watchful impact on their clients and their business priorities. So he's not sounding cautious, but he is watching the macro environment. Deal wins for the company, though moderated. Last couple of quarters, the company had very strong deal wins by Honda, Renault, etc. So we have seen a bit of a drop-off in the company's deal wins. But the other one, UPL, came out with numbers very close to market close. The stock fell 3% after it failed to meet estimates in the second quarter. Net loss of 189 crore, a guidance cut. Sonal joins in with the details.
Well, UPL was a disappointing set. In fact, the company reported a loss of 189 crore rupees versus expectation of a profit. It was expected to be a weak quarter, but not that weak. In fact, margins came in at 15.5% versus a poll of 19%. There was a fall in EBITDA and revenues as well. Across all the geographies, there was a decline. If you look at Latin America, down 17%, Europe down 7%, North America down 57%, and rest of the world down 4%. India also down 23%. The major disappointment came in form of their guidance cut in both their EBITDA and revenue. They expect their FY24 revenue to be flat now versus the growth that they had expected earlier. Their EBITDA is expected to either decline or be flattish versus their earlier expectation of a 3 to 7% growth. So yes, they're talking about lower growth coming in FY24. However, they did add that second half will be better than first half. But yes, of course, there's a sharp stock price decline that we've seen on the back of this big loss and the guidance cut that the company has released in its results today.
Thank you. But Sonal, do stay on because Petronet LNG tanked 8% despite the Q2 numbers looking pretty good. But the street is disappointed about some big capex plan of more than 20,000 crore that the company has announced. Can you take us through those numbers and the company's diversification plans?
That's right. The earnings are not a problem for Petronet LNG. In fact, they recovered on a quarter-on-quarter basis. What the street didn't like is this big capex announcement that the company made. They said in their press release that they will be investing up to 20,685 crore rupees, which will be to set up a petchem project, including propane and ethane handling facility at their Dahej plant. Now, this comes as a setback because the company is known to have made some additional capex decisions in the past, which the street did not like earlier. And this seems to be a segment where there's a lot of volatility. Petchem is a place where it is a cyclical industry and not many players have been successful as well, barring something like Reliance Industries or Indian Oil Corporation as well. In fact, GAIL reported a loss in Q1 in their petchem segment, which is expected to continue in Q2 as well. So yes, it continues to be a segment where the chances of success are low and the amount that Petronet LNG will be putting is very high. Additionally, remember, the company this time announced a dividend of around 7 rupees per share. Historically, they have been paying out 70% of their cash as dividend. So the dividend payout is high, but it could get impacted because of the large capex that the company has announced. So the usage of their funds and the capex direction is something that the street is worried about as well. This is the reason why the stock fell in trade today. Apart from that, if you look at the numbers, absolutely fine. Revenues were up 7.5%, EBITDA up 3%, margins came in at 9.7%, leading to a profit growth of 4.5%. So disappointment this time really was the capex announcement by the company.
Got that. Thank you very much for that. And Marico came out with an inline set of numbers in the second quarter. The company's profits at 360 crore, marking a growth of 17% year-on-year. But the company's top line from operations dipped marginally at 2,476 crore. It's a decline of about 0.8% compared to what they reported last year. Margins at 20.1% is higher than the 17.3% on a year-on-year basis. Moving on then to some other important corporate developments, the Securities Appellate Tribunal, SAT, has set aside SEBI order that barred Puneet Goenka from holding key managerial posts in Zee entities. This included the merged Zee-Sony entity. The market regulator, however, will continue its probe against Goenka in the fund diversion case. Yash joins in with the details. Yash.
Well, Reema, the direction coming from the Securities Appellate Tribunal, they come as a much-needed breather for Puneet Goenka and more importantly for his position at the new merged entity that is Zee Entertainment and Sony. The Securities Appellate Tribunal essentially has set aside market regulator SEBI's restraining order against Puneet Goenka, which sort of restricted Puneet Goenka from taking the position of MD and CEO in the merged entity whenever that entity comes into existence. Additionally, what SAT has also said is that SEBI will continue its investigation into the matter, which deals with siphoning of funds as well as fund diversion against Puneet Goenka as well as Subhash Chandra. And Puneet Goenka will have to cooperate with market regulator SEBI as far as that investigation is concerned. But all in all, he'll have a free hand whenever that new entity comes into existence to take over the position of MD and CEO. Now, all of this relief which has come for Puneet Goenka hinges on the fact that SEBI does not reach out and move Supreme Court challenging SAT's order, because if that happens, then of course it's essentially taking a new legal course as far as this particular matter is concerned. Again, waiting for new directions from Supreme Court on what the future course could be if SEBI moves Supreme Court challenging this particular order.
Okay, thank you very much for that. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.